was a miss over the consensus. But what was more important was the downward revision, not only to the previous month, but to every month of 2023. The official unemployment rate held steady at 3.6%. That was what was expected. But another weak number, and especially shocking given the ADP number that came out earlier in the week, which was so strong, almost 500,000 private sector jobs. The official number for private sector jobs by the government was just 149,000 jobs. That was well below the 199,000 jobs that had been expected. In fact, the consensus range for the private sector was between 180,000 and 253,000. And we came in well below the low end of that range at 149,000. So a very weak number. Manufacturing jobs, 7,000, a small number, actually a bit more than was expected. It was 5,000, although they did revise down the previous month from 2,000 to 3,000. Now again, obviously too, these numbers are guesses because they're not exact, right? It's not 5,000, 2,000, 3,000. I mean, the numbers are coming out exact because they're a guess, right? If they knew how many jobs, they wouldn't end in all these zeros. So it's an estimate. I just think the estimates are probably way off. Labor force participation, that stayed the same at 62.6. This is still a low number. I mean, we haven't really recovered much from the COVID lows as far as labor force participation. Average hourly earnings were up 0.4. That was a bit hotter than what was expected. It was expected to be up 0.3, and they revised the prior month from up 0.3 to up 0.4. So that's a little hotter on the inflation front, and that's why the year-over-year increase in average hourly earnings came in at 4.4. That was above the 4.2% expected and equal to the 4.4 from the prior month, which was an upward revision from 4.3. So not only was the jobs number weaker than expected, but these earnings numbers were higher, and that is a negative for the market. And the market reaction, again, I think was very telling. Because when the ADP number came out, right, the bond market got killed because the number was stronger than expected. But then when we got the government number coming out weaker than expected, bonds went down again. I mean, they didn't go down as much, but they went down. They didn't recover. You would have expected the bond market to rally. It would have been a relief rally because maybe the bond market thought that given how hot the ADP number was, that the government number would be hot too. Instead, it came out cold, but bonds didn't recover. And to me, that was very negative for the markets because I've been looking for and waiting for a breakdown in the bond market. I've been thinking that we're just going sideways, but that we have another big move down in bonds, meaning a big move up in yields. And that could be happening where we start to see the movement on the 10 to the 30 from a 4 handle to a 5 handle. Remember, we've already got the shorter maturities in the 5s. The longer term bonds should be up there too. And if that happens, if we start moving towards 5% on the 10-year through the 30-year, that is going to be a huge problem because that's going to put a lot more downward pressure on the portfolios of banks, right? All their underwater mortgage-backed securities and treasury portfolios are about to get hammered, which means a lot more bonds are going to be swapped with the Fed because the Fed is there to backstop the banks. This is going to put a lot of pressure on the banks. It's going to put a lot of pressure on commercial real estate, and it's going to put pressure on the stock market. But also what I thought was significant about the sell-off in the bond market that we had on the week is that we didn't get a rise in the dollar. In fact, we got a fall in the dollar. The dollar index closed last week at 102.9, and it closed this week at 102.27. It got clobbered on Friday, after we got that weak jobs report. In fact, all of the losses for the dollar happened on Friday with that weak report. But the bond market didn't recover any of its losses. In fact, it closed pretty much on the low of the week. And the same thing with the stock market. The Dow ended up dropping almost 200 points on Friday. So it didn't recover anything. In fact, on the week, I wrote down the numbers. The Dow was down almost 2%. It was the worst weekly performance since March of this year. NASDAQ down almost 1%, 0.9. S&P down 1.16%. So we may have seen the peak in the stock market, especially if we're about to have another leg down in the bond market and a move up in gold. But also problematic for the markets. Look at oil prices. Oil closed at almost $74 a barrel, up $2.06 on Friday. Closed very strong on the week. You know, OPEC had a meeting during the week. I didn't really get any of the news. You know, the OPEC meeting happened about 2 blocks away from my hotel when I was in Vienna. In fact, all the OPEC guys stayed in the same hotel as me, because when I came down that morning to leave, because we left from Vienna to Budapest, but as I left the hotel, the lobby was swarmed with OPEC guys. And they had all these cars and police out front and security guards, you know, to protect these guys. But, you know, I'm not really sure, again, what happened at the meeting, but oil prices were very firm following that meeting. And so oil is really breaking out. If you kind of look at it on a chart, we're breaking out of this consolidation. Normally, you do see an inverse relationship between oil and bonds, because rising oil prices could reflect inflation, and higher inflation is bad for bonds because it erodes away their value. So you've got this move up in oil. Gold, again, I said was up about $6 on the week, but all of that rise happened on Friday. We had about a $14 move up in the price of gold. So gold moved up on the week jobs numbers. The dollar moved down on the weak jobs numbers. That's what you expect. But bonds sold off. And so stocks sold off, and you got this oil rally. So to me, this is negative for the U.S. markets and indicates positive momentum, I think, for gold stocks. I mean, gold stocks were down on the week. They were all up. They had nice gains on Friday. I mean, gold stocks are among the only gainers in oil stocks. But the GDX and GDXJ were still down. When I started talking about this was because the media is looking at what's going on, and they're surprised by these events as if they just kind of happened out of left field and nobody could have predicted them. And remember, that's exactly what they were saying at the financial crisis in 2008. That nobody could have predicted it. It was a 100-year flood, a black swan, right? Like, it was like, you know, just happened. No, it didn't, because I was predicting it publicly for years. It was obvious to me what was going to happen as a result of these artificially low interest rates that inflated the housing bubble. I saw it. I knew people were taking on more debt than they can repay because rates were so low, and banks were extending credit in that environment to people who were not going to be able to repay their mortgages. I even remember being critical of the fact that when people were taking out adjustable rate mortgages, you could get a Fannie Mae or Freddie Mac guaranteed mortgage just based on your ability to afford the teaser rate. So the U.S. government was guaranteeing that a mortgage would be repaid, but only looking at somebody's income relative to the initial teaser rate on their mortgage. So let's say somebody was earning $2,000 a month and they had a mortgage, and the mortgage was, let's say, $1,000 a month, mortgage payment, and the government would guarantee it, say, okay, we're going to guarantee this mortgage, right? The guy's earning $2,000 a month and his mortgage is $1,000 a month, half his income, but we're going to guarantee it. Well, what they didn't look at was, well, what could possibly happen to those payments in the event that interest rates go up? Well, let's say the maximum payment on that mortgage could have gone up to $2,000 a month from $1,000 a month. Well, is the guy going to pay his mortgage if it consumes 100% of his income? Of course not, because he's got to eat. He's got other expenses. Yet the U.S. government was dumb enough to put taxpayer guarantees behind these mortgages. I mean, so everything was obvious to me in the lead up to the 2008 financial crisis. And then, as soon as the government announced their cure, I knew that the new disease would be even worse than the one they were trying to cure. Although it wasn't a new disease, it was just the same disease, right? We just, made it worse. We just, supercharged that disease so it would come back and do even more damage than the original disease. And that is what is going on. But these commentators are acting as if, we couldn't have saw this coming. I mean, especially when they're talking about what's happening in Europe. I mean, Europe had negative interest rates. How dumb was that? And banks were buying bonds with negative interest rates. I was pointing out at the time the absurdity, how much money was going to be lost by the bag holders, right? Yeah, those bonds were fine as long as you weren't caught holding it to maturity. But, all these banks were dumb enough to put this paper on their books and then say we're holding it to maturity. It was like, a hot potato. You could get the bond, but you had to quickly turn around and pass it to someone else. Maybe kind of like Old Maid, right? You can win the game of Old Maid, with having the Old Maid in your hand. You just can't have it in your hand at the end of the game. Well, the problem is all these banks, they got the Old Maid, right? The game ended, the Fed jacked up rates, and everybody loses. Every card in their hand is Old Maid. Well, I don't know if you can play that game anymore. It might not be politically correct, so maybe some of you younger guys don't even know what I'm talking about. But the point is, the music stopped playing, and they don't have a chair. Maybe musical chairs, maybe you know that one. But this was obvious. In fact, I was so worried about this years ago, when we were still running Euro Pacific Bank, before it was, put into receivership. And it's almost now, it's going to be 9 months since it was put into receivership. And again, I see on the internet, people, want to blame me. Hey, Peter, why aren't your customers getting their money back? It's not my fault. The money's there. It's the governments that aren't letting the money be returned. That's your government in action, right? They bail out some banks that are insolvent, and then they take a completely solvent bank, shut it down, and they refuse to let the bank return the money to the customers. But I think it will hopefully happen soon. Fingers crossed on that. But years ago, when deposit rates were negative on euros, right, and we had a bunch of euros, and we were getting charged to keep the euros in it, and we had to pass that on to our customers. We started charging the negative interest rates to our customers because we were paying the bank where we kept the euros negative rate. Now, we could have moved our euros to Deutsche Bank. Deutsche Bank actually didn't have a negative rate. They were like the only bank that we could find that wasn't going to charge a negative rate. But we didn't want to put our euros at Deutsche Bank. Why? Well, because we were worried about the solvency. Even back then, I was worried about Deutsche Bank. The reason that Deutsche Bank had to pay higher interest, than other banks, the reason that Deutsche Bank had to pay a higher interest rate than other banks was because it was riskier. So anybody who put their money with Deutsche Bank in order to get a higher return or to avoid a negative return, which is the same thing, they were taking additional risk. Now, I didn't want to do that, right? I wanted to keep the money safe. I wanted to put it in a bank that was more reliable, more trustworthy. Because remember, my bank didn't have any deposit insurance. So we had to be frugal. We had to actually look around and make sure that the banks that we were putting money with. And at one point, we had a lot of accounts. We had accounts with like 6 or 7 major banks around the world. Now, after the 60 Minutes defamation came out, a lot of these banks that we were working with stopped working with us. So we had to move money around. Our choices became limited after that happened. And, all these banks, it wasn't easy to get accounts with these banks. I mean, they did major compliance on my bank because most banks, they couldn't get these accounts. But we had such good, protocols for KYC and AML. I mean, they wanted to do business with us. We had a very good track record until it was destroyed by the false allegations 60 Minutes. But again, I don't want to get into that again. But the point I'm making is way back then, there was risk in Deutsche Bank, and it was apparent. So how are people now so surprised? Oh, they've got a problem in the European banking? They've raised interest rates? They've barely started to raise rates. What is it, 3% in the Eurozone? It's 4% in the UK. They got 10% inflation. They're not even close to rates high enough to fight that inflation. Imagine what would be going on in Europe right now if they did raise rates high enough to fight inflation. I mean, could you imagine if everything is collapsing now and the rates are still this? Don't expect this to be this dollar bear market to be like the previous bear markets. So I think when the dollar goes down this time, it's not getting back up. It's down for the count. This is going to be a knockout for the US dollar. And so what that means is that all of the investment strategies that I have been pursuing and recommending are that much more important now than they've ever been, because I think we're that much closer to this end game. And so that means, you got to be in, as I've been saying, and ever since this banking crisis started, and I've been doing these live podcasts, I've been pounding the table, buy your gold while it's still below $2,000 an ounce. Well, you know what? It ain't below 2,000 anymore, or maybe it's $1 below, but you got to buy it. It's going up. Silver's going up. I think we're just on the launching pad. I mean, you could say maybe we're at the low end of a higher trading range now around 2,000. I think we're at the launch pad of a moonshot personally. But either way, I mean, I think this is where you want to buy gold, whether you're buying the low end of a new range or you're buying the launch pad. I think it's upward is where we're going. And you want to get rid of the dollar before the bottom drops out of the dollar. You want to get fully invested in these foreign stocks. We're already outperforming the S&P nicely. In fact, the my gold fund is now up better than 20% on the year. It's beating the NASDAQ now. As I've been saying, the gold stocks are the new tech stocks. And an important observation, I mentioned just earlier in this podcast that the gold hit a new 52-week high. Well, gold stocks on the day that gold hit that new 52-week high, the senior miners, the GDX, still needed to go up another 20% to hit a 52-week high. And the GDXJ needed to go up 25% to hit a 52-week high. Why is that? Why are these stocks so low? In fact, if you look at where gold was in 2011, right, gold was at 1,900. So gold prices are higher today than they were in 2011, but gold stocks would have to go up 4 or 5 times to be back to where they were in 2011. Why? What's the difference? It's the same gold price. Why are gold stocks so much lower? And why are they not making new highs, the way they were a year ago when gold was at the same price? That has to do with psychology. See, in 2011, when gold got to 1,900 for the first time, gold traders were like, this is great. It's never going to stop. Gold's going to the moon. I remember back then I was there. I thought it was going to 5,000. I mean, I was wrong. I mean, I was right in that it's going to go to 5,000 eventually. I thought it was going to get there in a few years, right? A lot of people were excited about gold back in 2011 with 0% rates and quantitative easing. And so because people were so optimistic about where gold was going, they paid up for gold stocks. Well, as it turned out, we were all wrong. We were wrong to pay up for gold stocks in 2011 because it was about to have a huge correction. And so gold stocks reflected optimism that wasn't actually warranted. Well, today, it's the opposite. Why are gold stocks not soaring with the price of gold? Because the gold stocks reflect pessimism that is not warranted. Back then,
everybody expected the price of gold to keep rising, and so they bid up gold stocks. Now, nobody expects the price of gold to keep rising. Everybody's waiting for it to fall. So nobody wants to pay up for gold stocks. They're wrong again, just like they were wrong to expect the price of gold to keep rising in 2011. They're wrong for expecting it to fall in 2023. We're just getting started with this bull market. Now, you can say, well, Peter, maybe I'm wrong again because I was optimistic back then. But so is everybody else. We were all optimistic back then. Now I'm the only one. I mean, there's a few of us, but the market per se doesn't agree with me. And I remember getting a little nervous in 2011 because when I was bullish on gold in 2002 and 3 and 4, I was the only one, right? I mean, I was go on these TV shows and people would make fun of me when I said gold was going to 1,000 and it was, 300. But by 2011, there were a lot of converts, right? All of a sudden, the financial crisis, quantitative easing, 0% rates. So the crowd, agreed with me. And that ended up being, a short-term top, and it was pretty long for a short-term top. But right now, to me, it feels more like 2001, 2002. People don't see the potential in gold, just like they didn't see it back then. And so they're not bidding up these stocks. And why do they not see the potential in gold? Because they still have confidence in the Fed. They think the Fed is going to be able to keep rates high enough, long enough to bring inflation back down, and that inflation is not a problem. It's been completely vanquished by the Fed. That confidence hasn't died. It is going to. In fact, it's probably in the process of that happening, but it hasn't happened yet. And so these gold stocks are super cheap. People can buy gold stocks today and get a better deal than the people who bought them a year ago. With all this that's just happened, right? I mean, price of gold has gone up, but we have this banking crisis that started. The Fed is on the verge of rate cuts. They've already gone back to QE. And you can buy gold stocks cheaper today than people bought them a year ago. In fact, you can buy them cheaper, much cheaper than people who bought them 10 years ago, 12 years ago. Now, of course, the reality is the people who didn't buy gold stocks 10 years ago, they're not going to buy them today. So it doesn't matter that they're on sale because they're going to miss the sale. The people who have stood on the sidelines and have never bought gold stocks, they're still not going to buy gold stocks. By the time they buy gold stocks, they will be triple, quadruple, quintuple, I think, where they are right now. Because the people that should be buying them won't. Because the people who understand why you need to buy them understood it 10 years ago, right? And so they bought. And it's, so it's surprising that the people who were clueless have an opportunity to make an even better buy, but they won't because they're still clueless. But what you can do, if you bought 10 years ago and you still have them and you have more money, you can buy more. I mean, that's what I've done. I mean, I owned my gold stocks 10 years ago, 20 years ago, actually, some of my gold stocks. But along the way, I keep buying. Every time there's an unexpected decline, I take advantage of that opportunity and I buy more. And so now if we get the big, move up in the price of gold, I'm actually in a much better position to profit from it than I would have been had it happened 10 years ago. I mean, I was in good position back then too, but I'm in even better position right now. And I think other people should take advantage of opportunities that most investors remain oblivious to. Anyway, I want to wrap up the program, though, just talk a little bit about politics. And a lot of this stuff is going to be driven by politics. But take a look at what happened in Chicago. Brandon Johnson was just elected mayor of Chicago. Now, this guy has the potential to be the worst mayor that Chicago has ever elected. And that's really saying something because look at the mayor that just left, right? Lightfoot, was booted out because of the mess she made. And then instead of bringing somebody in that might clean up the mess, they brought somebody in that's going to make an even bigger mess in Brandon Johnson. I mean, this guy is a total Marxist. I mean, don't take my word for it. Just go to his website, his campaign website, and read through, his platform. I mean, it's more like a threat. I mean, these are all the threats that he's making. I mean, to the extent that this guy can actually succeed in implementing these harebrained ideas, Chicago's done. I mean, turn out the lights. I mean, it's, is going to be a complete disaster for that city. One of the things, obviously, is crime. That's been a big issue. And if you listen to what this guy says, his solution to crime is for the government to spend more money, but just not on the police. No, no, no. Just more social programs. Government's going to create more jobs. We're just going to hire all these criminals. The government's going to, find jobs for them. And so they won't have to commit crimes because they're going to have all these government jobs. I mean, this is complete nonsense what this guy is saying. Now, he wants all these higher taxes on the businesses and the rich as if they're going to stick around and not get out of Dodge. I mean, you've got enough reasons to leave Chicago. And now higher taxes are just going to accelerate that, just like Biden with giving people more reasons to get rid of the dollar by sanctioning Russia. If you start raising taxes, when the city is already in such bad shape, it's like, hey, you're not even protecting your citizens. You've got crime is rampant and you're going to raise taxes and you're not even going to use the money to try to fight the crime that your policies have helped to create. And of course, they want to blame all these problems on racism and stuff like that, which of course has got absolutely nothing to do with it. And the solutions that this guy is proposing are simply going to worsen the problems that government has already created in that city. In fact, if I lived in Chicago, I wouldn't just leave Chicago. I'd leave Illinois. I mean, I wouldn't even want to be in the state because obviously the state is going to be dragged down by what's going on in Chicago. But, it also shows you the mood of the electorate and just, how foolish people could be to live in a city with such huge problems that are a direct consequence of big government and be fed up to the point that you want to throw the bums out and you want to bring somebody else in and you bring in an even bigger bum who's basically got the same failed prescription as the one you already had that got you so sick. And now you just want more of the same. And hopefully that doesn't happen to the country because that is a horrible example. If that's kind of like the blueprint for the way this is going to go down, because the United States is in for a massive economic collapse, not just a financial crisis, but a dollar crisis, a sovereign debt crisis, a true economic crisis in every sense of the word. If we are on the verge of losing the reserve currency status of the dollar and we have a crash in the dollar, the economic collapse that is going to ensue is going to, again, make whatever happened in 2008 or 2020 with COVID look like that proverbial Sunday school picnic. And we're going to have a choice, right? Just like the choice that they had in Chicago. And hopefully we don't make the same choice. Hopefully we don't reelect even bigger socialists to take the mess that the socialists that have been in office for decades created and then just go all in, with Marxists and say, oh, we need even more government. That's the problem, right? We need bigger government, to clean up this mess. Or maybe we'll do what people in Chicago didn't do and actually throw the bums out and recognize that it's government that created this problem and try to return to free market capitalism, try to re-embrace the principles that made the country great, not double down on the principles that destroyed that greatness. But if Chicago is any example, that ain't the way it's going to go down. But you can always hope for the best, but you better plan for the worst. And that means you get your portfolio not just crash-proofed, but inflation-proofed. And don't take any more time. Just get everything done. Anyway, that's it for today. Going to have normal podcasts again this week. Vacation is over. Back down to business. And I think we're going to see a lot of fireworks in the market in the coming weeks as these anti-dollar forces really take hold. And so I'm expecting to see some downside in the dollar and upside in the price of gold. And a lot of what I've been saying, I expect to be validated in the weeks and months ahead. Anyway, thanks for listening, and I'll be back again with another podcast soon. aside, how is it that this saves the taxpayer money? Well, obviously, if the government has to pay interest on the national debt, right? Well, the taxpayer has to cover the cost, right? That's, the public pays for all government spending, including what it spends on interest for the money it borrowed to spend in the past, right? That's why borrowing to spend costs taxpayers more than if the government just taxed them initially to cover the spending. Because when the government taxes you today to cover the spending, there is no interest. But if they borrow the money and tax you tomorrow, well, they have to tax you extra tomorrow, because now they have to cover not only the cost of the money they spent, but of the interest that they now owe because they borrowed the money instead of collecting it in taxes. And so then the taxpayer is now on the hook for the principal as well as the interest. But obviously, if we can refinance that debt, right, then the taxpayer is on the hook for a smaller payment, right? So that would be a great savings, and that's what Mnuchin is talking about. But how are we going to do that, right? Who is going to be dumb enough to buy those refinance bonds and lend money to the U.S. government for such a low rate for the next 10, 20, or 30 years? Pretty much nobody, other than the Federal Reserve. See, the Federal Reserve has basically said, go out and spend as much as you want, borrow as much as you want. We got your back. We're just going to keep monetizing the debt. We're going to do an unlimited QE. So if Mnuchin is going to take advantage of the Fed's generosity with our purchasing power and is going to refinance the debt, the only buyer of those new low coupon bonds will be the Federal Reserve. So we're basically just going to be moving all this debt onto the balance sheet of the Fed, which means we're moving the cost to the American consumer by way of a destruction of his purchasing power. We're getting lower interest rates, but we're getting higher consumer prices. That's the trade-off, right? We're going to make inflation higher because we have to increase the money supply in order to refinance the debt. But now we replaced private sector capital with government printing press money. So now we have massive increase to money supply. Prices are going to go up. So whatever Mnuchin saves us in interest expense, we will more than lose that in higher prices for other goods and services that we buy, including a lot of goods and services that the government buys and bills us for. And of course, when the cost of living goes up, what's going to happen? Well, all those government workers are going to want to get raises. And so now we're going to have to give the government workers a raise. And so it's not going to matter that we saved a little money on lower interest rates, because the process of making that possible costs us a lot more money in other areas. One story too, I was tweeting about it. I wanted to talk about it as a much better example of what to do. And this had to do with Norwegian Air, which, they've had a lot of trouble. They're a discount airline, but they've been in a lot of trouble. And, the stock price was like 200 kroner a few years ago. Give you an idea, it's like 4 or 5 kroner. So it's really gone down. And it went down a lot too since the COVID crisis started. But what happened to Norwegian Air is they just did a major refinancing with their creditors, where their creditors agreed to swap all their debt for equity. And they got stock at 1 kroner a share, which was about a 75% discount to what the market price was. But basically, the stockholders took a huge haircut, the equity holders, and the bondholders are now stockholders. And so the company now doesn't have any debt. And now, why did they do that? Because the Norwegian government did say, look, we will help get a government loan, government guaranteed loan for your airline. But we're only going to do that if you have the bondholders convert their debt into equity, because we don't want this company loaded up with debt. We want it to have a good balance sheet, because if we're going to loan money or guarantee a loan, we want to make sure there's good collateral, and we don't want to have all this other debt encumbering the airline. So we're willing to bail out the airline, provided that the airline is debt-free, and we're not really bailing out the investors. And so what happens is the investors take a huge haircut. They don't lose everything. They still have a small piece of the pie, but they've been massively diluted. And now the creditors, well, they've lost something too, because they've gone from bondholders, where they were guaranteed to get their money back, and get an interest payment. And now they're stockholders, where they're now running the risk of the airline going bankrupt. And now they're no longer creditors. They're now equity investors. But, the company is in much better shape now. And so the government basically, knew to at least, look, if we're going to bail you out, you're going to, go through a bankruptcy first, and then we're going to bail out the recapitalized entity with new owners. We're not going to bail out the management that ran the company into the ground and didn't have enough rainy day funds. We want to bail out the new management that takes over a well-capitalized company that no longer has any debt. And the irony of it is, after this was done, they probably didn't even need the government bailout. They probably could have gone out and borrowed the money on their own once they did this. But, the government basically, forced this to happen. But this is the way, if the government's going to get involved at all, right, which I still don't think it should, but if the government's going to get involved at all, that's the way to do it. The way they did it in Norway, not the way we're doing it here. What are we doing? Are we forcing any equity holders to take any haircuts? No. Are we forcing any bond holders to convert to stock? No. We're just showering money on the airlines. Here you go, right? And they're just as indebted now as they were before. In fact, maybe even more so, to the extent that the government loans the airlines more money without having them clean up their balance sheets first. We're just piling more debt on top of airlines that are already overly leveraged. So we're making the situation worse. And of course, what Norwegian Airlines announced is, look, they're going to dramatically reduce their planes. They're going to have fewer planes flying. They're going to return to profitability. Obviously, there's going to be layoffs. They can't keep everybody on board if they're going to shrink the airline. If they're going to have fewer planes flying around, they don't need as many people flying them and maintaining them. But the airline will be economically viable, right? And then they can repay the loans, and the Norwegian taxpayers won't be on the hook for a loss. But in the meantime, the airline is still flying. See, the customers can still travel by air. And the U.S. government made it out like, oh, if we don't shower these airlines with money now, they're just all going to go out of business and no one's going to take their place. And then nobody's going to be able to fly because there's going to be no more airlines. And we're all going to have to take Amtrak, right? Because all the airlines are going to go bankrupt. None of that would have happened, right? That was the industry trying to scare the public into backing the politicians for supporting a bailout of investors and banks, right? Under the guise that it's a bailout for the flying public. Anyway, I want to just finish up today's podcast, though, talking about Bitcoin, because we actually had the Bitcoin halving. We finally halved the rewards that the miners get. And this was, everybody was celebrating and cheering this event on, and, been buying into this for months and months and months, because, once the halving happens, Bitcoin is going to be much more valuable because the supply is going to be reduced. And that's what I keep hearing. The supply is going to go down. It's cut in half. The supply is not cut in half. What's cut in half is the rate of increase in the supply. So the supply is still going to go up. In fact, it's still going up now. It's just not going up as fast as it was going up before the halving. But people say, well, even that means if the supply is growing more slowly, then that's still good for the price of Bitcoin. Well, that assumes that the demand continues to grow. But what happens if the demand shrinks, which is what I think is going to happen? What happens if you had a lot of extra demand before the halving, because a lot of people wanted to get in because they were convinced once the halving happened that Bitcoin price would go way up. And so they wanted to make sure and load up on Bitcoin before the halving, because it would get more expensive after the halving. So whatever you wanted to buy, you better buy it before the halving. And in fact, buy even more than you need, because then you can sell it after the halving at a profit, right? Well, now we get to the halving, and right. And that's why so many lawyers go into politics, because they have a lot of practice lying. And if they're really good at lying, then they're going to politics. Now, some lawyers who are really good liars, after they go into politics, then they become judges, right? Because they're lawyers with political connections. And so everybody is lying. So the fact that Biden lied, it doesn't shock me, and the fact that he took bribes, a lot of people, that's why they go into government, so they could sell their influence, so they can take bribes. Now, a lot of times they wait until they leave, right? They go to Washington, they make a bunch of friends, and then they leave, and then they become lobbyists and they sell their influence that way. Now, that at least, I guess, is legal. What Biden did, he didn't wait until he was out of office. He did all of it while he was still in office, while he was still the acting vice president. That's what makes this really criminal. But I think what's worse is the way the media is reporting this or not reporting it. Go out there and look at all the mainstream media reports about this. And they all start off with Republicans have no proof that Biden did anything wrong. This is all a witch hunt because at the end of the day, the Republicans can't prove that Joe Biden was in any way connected to all this money, which is BS because they don't have to prove it. It's a circumstantial case. The government doesn't have to find a document where Biden signs a contract where I will do this for you in exchange for this money. You're not going to put a bribe in writing. That's the whole point. Yes, obviously there was a backroom deal, right? A quid pro quo in verbally, right? Couple of people meet and they agree to do something. They don't leave a paper trail. The trail is the money. That's the evidence. The fact that you have 16 companies with no business purpose, performing no services that you know of, selling no products, earning all kinds of money without any invoices, and then you have all of these transactions without any legitimate purpose, and then all the money finds its way into the pockets of Biden family members. Like, is this some kind of coincidence that all this is happening? All of these foreign interests are just lavishing the Bidens with money just, for nothing? Of course, it's obvious what's going on here. Once you show this, this is how governments do money laundering investigations. I mean, I don't know. I mean, 7 governments have investigated my bank for money laundering, and they found no evidence of it. Well, there's plenty of evidence that the Bidens were laundering money. I mean, it's all there. I mean, this is exactly what they look for. Structuring, shell companies, transactions without any legitimate business purpose. That's what was going on. Now, the burden now, once you have this case, this strong case, circumstantial case against the Bidens, it would be up to Joe Biden and his family to now show the legitimate transactions that were taking place. Where are the invoices? You got all this money for doing what? Prove that you did something of value to earn this money. They should have the documentations of what they did. I mean, because if I'm going to send somebody millions of dollars, they better send me an invoice. I want to know what I'm paying for, right? I mean, what work did you do? I want to make sure you're not overcharging me. Produce those invoices, produce those documents. They can't do anything. They've got no evidence. So the media is focusing on the fact that there is no smoking gun that says, here's a contract that we have between Joe Biden and the Chinese, where Joe Biden is going to, pass this legislation or enact this in exchange for this money. There's no way that document is going to exist. That never exists. I know the government probably puts people away for money laundering, for RICO violations, with a lot less evidence than they got against Biden, because they don't have to have that smoking gun. When you can build a credible, strong, circumstantial case, if the person you're accusing can't come up with a rational explanation for what looks obvious, then he's going to be guilty. Yet the media doesn't even want to acknowledge that the president might be guilty. Instead, they're attacking the Republicans. I mean, imagine if this was Trump. Imagine if this happened with the Trump family and all this money was going to his kids. I mean, they would be all over him. They already are all over Trump for doing nothing. What did Trump do? He paid some money to somebody not to talk about something, a non-disclosure agreement, perfectly legal. They're just thinking, well, did it violate campaign finance laws? That's nothing compared to what Biden was doing. In fact, what Biden was doing is much more than the Watergate. I mean, Watergate was nothing compared to what Joe Biden obviously did, yet the media doesn't care. Meanwhile, everybody is talking about how this jury said that President Trump back in the 1990s, I guess, sexually assaulted, did not rape, but was too sexually aggressive with this woman in Bergdorf Goodman's back in the 1990s. I mean, who the hell knows whether or not this happened? I mean, maybe Trump forgot about it, or maybe it did happen, but, who cares? That was in the 1990s. I mean, maybe Donald Trump made a pass at this woman. Maybe he didn't. I don't know. Maybe it went a little far. Who the hell knows? But she didn't say anything about it in the 1990s or the 2000s. She just starts talking about it now. Yet the media wants to make this into a big deal. It was a different world back then than it is now, as far as what men could do. I mean, maybe you got a slap in the face if you were a little bit aggressive, but that was it. I mean, obviously times have changed now, but back then, that's how it was. But that's nothing. The media wants to focus on this, and of course, this lady is getting $5 million for defamation, right? I'm in a defamation lawsuit myself. She's getting $5 million because she accused the president of raping her. The president said that's a lie. And now she gets $5 million for defamation. Well, it was a lie because the jury didn't find any evidence of rape. Now, yes, they did claim that there was evidence of harassment, but that's not the same as rape. And so isn't he entitled, if somebody says, hey, you raped me, can't you say, no, I didn't? That woman's a liar? I mean, now if someone falsely accuses you of rape, you could still be sued for defamation if you call your accuser a liar, even if it turns out that they did lie about the rape, but maybe there's something else that you did that's not nearly as bad as rape, because whatever he's accused of doing is not rape. It's not even close. Rape is really, really bad, right? If you're just getting a little fresh with a woman and she feels uncomfortable, that's not raping her. I mean, that could be wrong, bad behavior, but it ain't rape. Rape is a whole new level. So if somebody says, yeah, he kissed me and I didn't want him to, and he raped me, and then you say, I didn't rape her, and it turns out that you did kiss her, but you didn't rape her, and she accused you of rape, and you said that she was a liar, you were right to call her a liar. It was perfectly legitimate to do that, but now apparently it's not, because he was awarded defamation. But the media is making a mountain out of this molehill. Here, Joe Biden has an actual mountain. This is a Mount Everest of evidence against Joe Biden. And the media is making a molehill out of that mountain by attacking the Republicans for going after the Bidens, when what the Bidens did was wrong. The media should be outraged by this conduct, especially so overt as to what actually took place. And the guy is still in office. And so that, to me, is more outrageous. I mean, the media, right, is not reporting the news. It is all fake news. The media is covering up, right, the Biden crimes. Now, why are they doing that? Well, obviously, because they don't want to hurt Biden politically, because they don't want to help Trump, because Trump's the most likely person that Biden is going to run against. And the last thing the media wants is a second term for Trump. And so if they have to lie and cover up all this dirt on Joe Biden in order to help ensure that Donald Trump doesn't have another term, well, that's what they're going to do. But that is not what the press is supposed to be here for. The press is supposed to, help protect us from corrupt government by reporting on the corruption, by keeping some checks and balances on government. I mean, that's the whole role of a free press, to help protect us from an oppressive government, not to help protect an oppressive government from the people, help an oppressive government cover up their crimes. But that is exactly what the American media is doing. And I think this is really a new low in the way they are covering this. And I'm sure more stuff is going to come out on this investigation as it continues. But one other thing, too, that I wanted to talk about related to media bias, because I read this long article in The Atlantic, And I wasn't really familiar with this story until I read this article. And it's about this guy, Jeff Karpoff, who started this company, DC Solar. And the guy is in jail now. He was sentenced last year. He's got a 30-year federal prison sentence for fraud, or I'm not sure exactly what he was convicted of, but he did a lot of bad stuff, and he's got 30 years in prison. But the article goes over this gigantic Ponzi scheme that he was running with DC Solar. But the article completely misses the point that it's the government that is responsible for all this. And it is just more proof that we don't want government involved in the economy. We don't want government picking winners and losers when it comes to business, because it just picks losers. You see, what this guy did is he invented a portable solar generator so that if you run out of power, you can just truck this generator in and it runs on solar power. And of course, the government loved this. President Biden made this guy's company a partner of the U.S. government, along with companies like, Alphabet and Amazon. He created some kind of group of companies that were partners in the battle against climate change. And so this company was exactly what the Democrats wanted, because it was solar power. It was green energy. This was great. So they had the government's good housekeeping seal of approval. But what else they had from the government was a tax credit. Back in 2005, the government passed this accelerated tax credit for solar. And whatever you spent on some solar product, you could get a tax credit for 30% of the purchase price. So if you bought something...
Unstable banking system, all because of the government. All the things the government did to shore up the banks is what made them so insolvent and so reckless. Capitalism would have given us a healthy, solid banking system. The government destroyed all that and replaced it with what we got now, which is a house of cards that is in the process of imploding. All the banks are being bailed out right now. Why do you think the government's buying up all this paper to prevent the banks from failing? They bailed them out in 2008, and now it's even more expensive to bail out the same banks again, except they don't want to admit that that's what they're doing, but that's exactly what they're doing. Okay. Do I purchase physical silver at a high premium locally or purchase silver futures? Futures are gambling. I say buy the silver, pay the premium, because the silver price is going to go up so much that even paying the premium is worth it. Because if you buy the silver, you got it. At least with Schiff Gold, you're not going to pay a big markup. You're going to pay a high premium now because there's hardly any silver there. But the physical market is going to lead the futures. Right now, it's just the over-leveraged speculators that are selling their silver. And they never even wanted to take delivery anyway. The real buyers are lining up to buy. We're running out of supply. The price, I think, is going to go way up. Once the speculators get flushed out, right, the price is going to take off. So I think it's all this speculative liquidation and margin calls and need for cash that is creating a sale on silver. So even though there's a big premium, you're getting a big sale. The price of silver was a lot higher a few weeks ago, a month ago. Silver has never been this cheap, even with the premium to gold. You can get more silver for your gold than ever before. Take advantage of that. Can you close that door? I hear a lot of kids. My kids are making noise in the other room. Let me see. Oh, how do I? Peter, explain. I did read negative rates. I'm 18 in June. I have 5,000 of McDonald's wages in my bank account. Can I buy stocks? Look, with 5,000, if that's all you got, again, I would buy silver coins, stock up on, supplies, groceries, stuff like that. If you really want to invest in the market, there's a $2,500 minimum in my gold fund. If you want to gamble with that money, if you want to, risk it, you can go online to europacificfunds.com, get a prospectus, and invest $2,500 in my gold fund. If you want to do that, I think you could turn it into a lot more money. You can go up 10 times, 20 times. But you can lose a lot of it if I'm wrong. So, if you want to take a shot, that would be something that you might consider doing. Young man with, the risk tolerance to gamble. Because I think it's a smart bet. I mean, it's the bet I'm making myself, but of course, everybody's circumstances are different. Here's a 20-year-old with $30,000 in cash. Should I put it into deep, out-of-the-money gold calls? No, look, I never encourage people to buy calls. I mean, if you want to do it, you can make a gamble, but you introduce a real element of risk, timing. Hey, it's obvious by now. I've been early on a lot of stuff, and you can afford to be early if you're not in calls or puts. But if you make an investment with a time horizon, a time limit, that's part of an option, right? Part of the value of the option is the time until it expires. And so if you buy an option that expires in 3 months and the event that you're anticipating happens in 4 months, you are very close. 4 months is almost 3 months, but close doesn't cut it. It may be in horseshoes, but not in options. If you miss it by a month, you lost it all. So, timing is tough. So, and as I said, I'm notorious early on my forecast. So that's why I tell them, give yourself time. Don't have time be your enemy, have time be on your side. So don't buy options, just buy gold, buy the physical gold. If you want more leverage, buy gold stocks. That's my take on it. Somebody thinks the silver coin, the $1 trillion coin, should be made of antimatter. Yeah, well, I don't know if they can mint that coin. Adrian announced both gold and Bitcoin spiked about 5%. Yeah, I mean, I know that Bitcoin and gold went up after the Fed announced QE Infinity, and gold continued to rise. Gold's up better than $60 now, and Bitcoin has surrendered a good chunk of those gains. I mean, Bitcoin, I'm looking at the high right now on Bitcoin. Let me see here. Trying to get my cursor over that high. It looks like it got up to 6,600 and change, and it's back down to 6,270, which is 6,200 is about where it's been. So Bitcoin is, I think before the announcement came out, it was around 6,000. So it's only rallied a small amount. And again, I think it was manipulated, and I wouldn't be surprised if Bitcoin came crashing back down and closed the day negative. I don't think there's a real correlation with gold. If anything, there's a correlation with other risk assets like stocks. But as I said, I think the Bitcoin bubble has popped. That's one of the other bubbles that, maybe was popped by the coronavirus pin. But yeah, I mean, people should sell into this rally. It's all manipulation. It's all being pumped up, and it's about to be dumped. Like every pump is dumped when it comes to Bitcoin. So don't get fooled. Don't allow this rally, this sucker rally, to create some kind of false sense of, oh my God, we're going to the moon, because we're not, right? We're coming crashing back down to earth. And, I'm not against Bitcoin, because I'm against the idea and the concept of a decentralized money that can neuter the central banks, that can be like a newer, modern version of gold. I get all that. All that stuff sounds great in theory. It just doesn't work. That's the problem. It's not that I don't like the dream. I do. I just know it's a dream. I want everybody to wake up, live in reality. Don't live in a dream world. Don't live in some kind of libertarian fantasy world. That's not where we live. We live in reality. And in reality, that's not going to work. What all the people in the crypto community should be doing with all this energy is focusing on gold, focusing on explaining why fiat money is no good and gold is the alternative, not convincing them that fiat is going to crash and then give them something else that's going to crash, get them from the frying pan into the fire. Because what's going to happen when you successfully educate somebody about the problems with the fiat monetary system and the problems with central banks, and then they put a bunch of money into Bitcoin, and then they end up losing even more money in Bitcoin than they would have had they stayed in dollars or euros or yen? Are they then going to believe, okay, we got it wrong, try gold next time? No, right? You never have a second chance to make a first impression. So if you're going to try to convince somebody to get out of fiat currency, don't start by introducing them to Bitcoin, where they're going to lose everything and then never want to talk to you again. Start off by putting them into gold. That's how we spread economic freedom. That's how we take on the central bankers with real money, with gold. They love it that people are into Bitcoin. Oh my God, these fools are going to lose a bunch of money. What scares central bankers is gold and people buying gold. That's what they worry about. They watch the price of gold every day. They couldn't care less about the price of Bitcoin. And there's a cost for doing that. It's embedded in there. But if you want to have an IRA and you have a brokerage account, buy them. Yeah, it's go online to goldmoney.com and open up an account there. The fees that they charge are less than the fees of the ETFs. And I think it's safer. I think your money is safer there. You own it. It's in a vault with your name on it. It's not in an ETF with somebody else's name on it. Don McCabe, my business lost all of its accounts. I'm in the auto industry. Everyone on Long Island is basically out of work. How long do I need to spend my money out until silver starts significantly, spread it out until silver starts rising? I don't know, but I would spend my cash first. I definitely would hold on to my silver as long as possible. But eventually, if you run out of everything else, you'll have to start cashing in your silver. But yeah, I think the longer you hold on to it, the more it's going to be worth. Now, there could be some short-term, head fake bounce in the economy as everybody spends their stimulus money before it loses value. But it's going to start losing value very quickly once it starts moving into the economy. See, a lot of the stimulus money from QE1, 2, and 3 went into the stock market. So nobody cared, right? It wasn't going into the supermarket. This time, that's exactly where it's going. And so the inflation is going to manifest itself in consumer goods in a much bigger way, despite the CPI numbers, which, basically hide the amount of inflation. There's always more inflation than the government will acknowledge with its, CPI numbers that are really reverse engineered in advance to kind of mask understating it then, and it's even more understating it now. But I mean, even with our bogus numbers, the inflation rates are going to be off the charts sometime soon. Has the price of gold been artificially suppressed? Of course. I mean, no, it's not artificially suppressed. I just think it's suppressed because a bunch of foolish investors don't know enough to buy it yet. They still think that the U.S. economy is sound. They still think that, the dollar is great and it's going to keep going up. So they don't know enough, right? They don't understand enough to buy gold. But as they will, look, more days like today, like I just pulled up the market. So the Dow is down over 800 points right now with about an hour and a half left to go. And I'm planning on staying live up till the close. And then I got to call it quits. So we still got like another hour and a half. But the Dow is down, 760 now. But gold's up more than $60. So we get enough days of people realizing that gold can go up when the market goes down. And look at gold stocks, right? The GDX, which is an index, an ETF of gold, senior gold stocks, is up 11.5% on the day. The GDXJ, which is the juniors, right? That one is up 13% on the day. So people are making 12, 13% in gold stocks as they're losing 4% in the Dow, right? And let that start to continue for a few more days and a few more weeks. Some more people are going to wake up to just how high. People are expecting the price of gold to fall. When the price of gold gets above 2,000, which I think it's going to do, right? I think 2,000 is a minimal target. I don't even consider 2,000 really a target because I think we're going to go so much higher than that. But that's like a big round number that will take gold above the old high of 1,900. That's a small move from where we are now, 1,650, 1,660 to 2,000. Percentage-wise, what is that, 15%? I think gold stocks could double on that move, maybe more, because nobody expects it. Everybody expects gold to come crashing down. When they realize that they're wrong, that gold's going up and it's going way up, then people have to make up for lost ground. A lot of people who sold these gold stocks because they had margin calls or whatever it was, people are going to be scrambling to buy them, I think. Now, obviously, I could be wrong, right? I don't think so. I think it's everybody else that's wrong. I think it's the people who are selling these stocks that are wrong. I think it's the people who are not buying them that are wrong. That's why I'm doing it, and we'll see who wins. We'll see who's right. If gold goes to 2,000, 3,000, 5,000, if these gold stocks go up 10 times, 20 times, well, then we'll know who was right. and who was wrong. But right now, everything that's happening in the economy convinces me that I'm right, because everything that's happening makes sense to me. It's all what I've been waiting for, what I've been predicting. It's not a surprise, as I said. All the conventional people, the mainstream thinkers, are just scratching their heads, thinking that nobody could have predicted this, and they still have no idea how bad it's going to be. That's the crazy part of it. They are clueless. They think it's bad now. Wait till they see what's coming. And when it does come, when we get the big inflation, when we get the long lines and the price controls, they'll be like, oh my God, who could have possibly predicted this? This is crazy. There's no one in the world who could have known this was going to happen, except there are plenty of people who knew. I'm just one of them. But they don't let those people on television, right? They don't talk to those people. Reporters don't quote those people. They don't hire those people to work in government. They don't hire.
Because when you loan money to anybody, whether it's a corporation, an individual, or government, the risk is that they don't pay you back. And so the credit rating is supposed to give you an idea of the strength, the credit quality of the borrower and their capacity to pay you back. And obviously, the greater the likelihood that they can't pay you back, the lower the rating. And of course, the higher the interest rate, because there's a trade-off. If there's a very low likelihood of default, then you're not going to charge that much interest. But if the borrower, is a little shaky and, there's some question as to whether or not they can pay back the money, well, then if you're going to lend to that borrower, you're going to charge a much higher rate of interest. And so, all these companies want to have a high credit rating because that reduces their borrowing costs. Now, normally, a big factor in judging creditworthiness is how much debt you have, right? If you don't have any debt at all and you have a lot of assets, well, you're going to have a high credit rating because it's not hard to handle the debt. But if you have a lot of debt already and then you want to borrow more, the fact that you have a lot of debt is going to call into question your ability to repay. And so normally, the more debt you have, the lower your rating is going to be. Well, the U.S. government is the biggest debtor of them all. I mean, the U.S. government has more debt than anybody. Yet the credit rating was still AAA. Now, in fact, a lot of people refer to U.S. debt as risk-free, right? The risk-free rate. So it's risk-free. No matter how much debt we have, nobody is worried about default. Well, the reason no one's worried about default is because the Fed can print, because the government is borrowing in its own currency. See, a private corporation or a state, they can't print money. So if they can't pay, there's nothing they can do, right? If they can't raise taxes, if they can't cut spending, then they're going to default. So there's a real risk there. But nobody really thinks that the U.S. government's going to default. They're just going to print. Now, that's despite the fact that we just had this big, debt charade, and President Biden, Janet Yellen, the Secretary of the Treasury, warned all of our creditors, we're going to default. If we can't raise the debt ceiling, we're going to default. So clearly, if you believe them, if they were being sincere, that's not risk-free. Because what they said is that if the U.S. can't go deeper into debt, then all the people who already loaned us money, you're SOL. Because America is only going to pay its bills if it can borrow the money to do it. But the minute we can't borrow more money, you're out of luck. We're not going to raise taxes. We're not going to cut Social Security, Medicare, anything. We're just going to cut the interest on the bonds, right? So you're low man on the totem pole if you own a U.S. Treasury. So it doesn't really sound like U.S. Treasury debt, should even be AA+, which is where Fitch put it. And by the way, when they moved it down to AA+, they left the outlook as stable, which makes no sense. I mean, if you're cutting the outlook because of the big deficits, which is what they said, well, I mean, the deficits are getting bigger. So it should be on watch for another downgrade. It shouldn't be stable. So, none of it even makes any sense. But if you believe what the president and the Secretary of Treasury said, well, the rating should be much lower. Well, obviously, nobody believes them. Everybody knows that no matter what, the debt ceiling is going to go up. And so nobody has to worry about default. But that does not mean there's no risk. There's a huge risk when it comes to buying U.S. Treasuries. And unfortunately, that risk applies to all bonds that you could buy in U.S. dollars. It doesn't matter
how creditworthy the issuer is, there is a huge risk. And in fact, you don't even have to lend money. The risk applies even if you take your dollars and stuff them under a mattress. And that is inflation. That is a loss of purchasing power. And that's really what these rating agencies should be rating when it comes to sovereign credit. If the sovereign is borrowing in its own currency, then let's take default risk off the table. Let's just, okay, there's not going to be default. The risk is depreciation. That's the risk, because depreciation is like default. If a government has to resort to a printing press to pay off its bills, then you're going to lose it in purchasing power. You'll get your money back, but not your purchasing power. So what Fitch and Moody's and S&P should be looking at when they rate the credit of the U.S. government versus the Japanese government, the German government, the Canadian government, the Australian government, any government, they should be looking at the fiscal situation and determine, is there a likelihood that this borrower is going to resort to printing money or quantitative easing, or do they have the ability to repay the debt honestly out of tax revenue or through spending cuts? And if they honestly assessed the credit worthiness of the United States, they would have downgraded to junk status. In fact, I don't even think U.S. Treasuries would deserve to be junk, because that would be, too high a rating. It's an insult to junk bonds. You're guaranteed to lose, right? There is no chance, if you were to buy a 30-year Treasury today at a 2% yield, whatever it is, with that coupon over the next 30 years, your chances of breaking even are zero. There is no way that you are not going to lose. I'm not talking about losing dollars. You'll get all your dollars, most likely, but those dollars won't have anywhere near the purchasing power that they had when you loaned them out. So you're guaranteed to lose. So if you're guaranteed to lose on a bond, what should the rating be, right? Because it's supposed to be a probability that you're going to get your money back. Well, if you buy U.S. Treasuries, there is no chance that you're going to get your purchasing power back. And that is the same thing. Look, think about it this way, because this is what the U.S. government does. Let's say, some guy comes to you and says, yeah, well, I want to borrow $1 million. Will you lend me $1 million? Assuming you had the $1 million to lend. And you ask this guy, well, what are you going to do with the money? And he says, well, I don't know, a year ago, I borrowed $1 million from somebody else, and now I got to pay him back. And so if you give me the $1 million, I'm just going to pay back this other guy that I borrowed from. And then I'd say, well, if you're just going to take this money and you're just going to pay off some old debt, you don't have any assets, how are you going to pay me back? And then the guy said, well, don't worry, because in a year, I'm going to find somebody else to loan me $1 million. And then I'll take that $1 million and I'll give it to you, right? Would you lend anybody money if that was the circumstances? Of course not. You'd have to be an idiot to loan somebody money just to repay prior debts. And the only collateral is their ability to go out and borrow more money from an even greater fool than you. Well, that's exactly what the U.S. government does every time. It borrows money. We're selling all these bonds now, not just to cover the budget deficit, which is running close to $2 trillion, but we have to constantly refinance all of the debt that is being accumulated as bonds mature, and we have to roll it over and buy, and the government has to borrow again. I'm trying to look up on my computer the national debt. I'm wondering,
especially if he thinks that the negative consequences of those price controls won't manifest until after the election. So in other words, he can get the benefit of prices maybe coming down a bit and voters thinking he's just done something, but not have to be held accountable because the damage doesn't occur until after the votes are cast. So he thinks, okay, maybe I get reelected and then everything hits the fan, but who cares? Because, I only have one more term, right? You can't get elected a third time, assuming Biden can get reelected a second time and actually live long enough to serve out his second term. But, he's not going to care. So I think this is likely to happen. I've been warning about price controls for a long time. We've repeated all the other mistakes of the 1970s. Why leave out price controls? The government has a perfect record of repeating every mistake it's ever made. It never learns from any mistakes. So if government is one thing, at least it's consistent. And so with that consistency in mind, price controls, even though they were abysmal failure when Richard Nixon tried them in the 1970s, there's a good chance that Joe Biden is going to try them in 2024. Anyway, that's a good segue to move into politics. I want to talk a little bit about that because yesterday we got the news that former President Donald Trump has been indicted yet again. This time a federal indictment. It's not, the city of New York. It is the U.S. government. The Biden Justice Department, the guy that beat Donald Trump in the last presidential election, although Donald Trump would beg to differ, but the guy that beat Trump and the guy who Trump is probably going to run against in the next election, that Justice Department has now charged Donald Trump, had him indicted with felonies. And I think the jail term, assuming Donald Trump is convicted of committing these felonies, he could go to jail for 10 years, right? From the White House to the big house. But, if anybody should go to the White House or to the big house from the White House, it's Joe Biden. I mean, the big house is the perfect place for the big guy. I mean, he belongs there far more than Donald Trump. Look, all politicians are crooked. Donald Trump may be even less crooked than most because he didn't spend a lifetime in politics. But Trump is being indicted for the way he handled the documents that he took with him, when he left the White House. I mean, come on, look who's in the White House. What about all the problems that Joe Biden had with documents? What about Hillary Clinton? What about all the problems that she had with her documents, right? Hillary Clinton didn't get charged. Even Donald Trump, when Donald Trump was president, yes, when he ran for president, lock her up, right? That got a lot of applause. It maybe won him some votes. But when Donald Trump was president of the United States and he controlled the Justice Department, he left Hillary Clinton alone. Didn't do anything. I'm sure that they had a lot more dirt on Hillary than the Biden Justice Department has on Trump. Yet Biden, no, he can't leave Donald Trump alone. They are trumping up these charges and filing them against Donald Trump. But I think there's a lot more here than meets the surface. I think that the political, gamesmanship here is not what it would appear if you just look at it superficially. A lot of people think, aha, you see, they're trying to get Donald Trump. They're trying to hurt him in his presidential campaign. They're not trying to hurt him in the primary. They're actually trying to help him. They realize that by charging him, they are helping him. They're helping Donald Trump raise money. They are helping Donald Trump garner sympathy, not only from the electorate, but from his challengers. Everybody who is running against Donald Trump has to defend the president against this political witch hunt. They can't say, yes, they're doing the right thing, because Donald Trump is very popular in the Republican Party, and you can't attack him like that and expect to win the nomination of the party. Everybody has to handle it with kid gloves. And so now Donald Trump's competitors are forced to say nice things about him. They are forced to come to his defense and unite against the corruption in the Democratic Party. This is increasing the chance that Donald Trump will be the Republican nominee. And that is exactly what the Biden administration wants. They want to run against Trump because they're convinced they can beat him. And they're convinced that these charges that will help him in the primary will hurt him in the general election. So they're strengthening him in the primary so they can beat him in the general election. It's like they're fattening him up. He's like a prize pig, and they want to fatten him up so that when they serve him for a meal, right, they're going to have a bigger meal because they've got a fatter pig, right? That's I think what their plan is. Now, it may work, But then again, it may backfire because they underestimated Trump the first time. They wanted to run against Trump. Hillary wanted to run against Trump. He was the dream candidate, and the dream turned into a nightmare when Trump won. And the reason Trump won, and one of the reasons I predicted that he could win when everybody else said he didn't have a chance, was because I knew the economy was bad, and at least Trump represented the possibility of change. He promised to make America great again, and so people were willing to give him a shot. Now, he had 4 years, and he didn't make America great again. That's why I don't think a second Trump candidacy is as good as the first one, because now he's not an unknown quantity. He's known somewhat. But I think the economy is going to be so bad in the 2024 election, and Biden is going to be even less popular than he is right now. Trump could win a second term. And, even if he didn't make America great again, he can pretend he did. And relative to how bad things are going to be in 2024 election, people might remember that we had a great economy. And if they don't remember, Trump will remind them. And so, people still might long for the good old days, because stagflation is something that we haven't lived with before. And they're going to be able to pin that right on Biden. But, this whole idea, though, that you could weaponize the Justice Department and go after your political adversaries, this is very dangerous stuff, right? Even if, my theory on why they're doing it is correct, it's wrong. You can't use the Justice Department in this way. It is there to see that justice is served. It's not there to help reelect the person who happens to be president, but the whole process is corrupted. Again, that's what happened with me. Why was it that the U.S. government decided to investigate me and my bank? Was it because my bank did anything wrong? No. It was because of the stuff that I said. It was because of my political opinions, my anti-big government, anti-regulation, anti-tax. That's why they wanted to go after me. They wanted to take me down. The problem was I abided by every one of their stupid rules and regulations that I opposed. In fact, one of the reasons I oppose them is because I abide by them. And by abiding by them, I know exactly how much they cost. I also know that they don't do any good. They actually do harm. They don't do any good. So because of all my experience complying with government rules and regulations that don't do anything to protect the customers, all they do is increase the costs that the customers have to pay and diminish competition. Because I understand the consequences, having lived with them, I oppose them, and I make that opposition known. But I'm not dumb enough. I mean, apparently they think I'm dumb enough to criticize the regulations and then not abide by them. No. The only way I would criticize the regulations would be if I was abiding by them, because I know I would make myself a target. In fact, if I wanted to violate government rules and regulations to save money or for whatever reason, if I really wasn't dotting every I and crossing every T, if I really was doing what they suspected me of doing, the last thing I would do would be to call attention to myself. I would be as quiet as a mouse. I would be out there like Bankman-Fried talking about how great the government is, right? I'd be virtue signaling to everybody so nobody would notice how much money